And it's time now for the Wall Street Beat, because we're looking at the $6.4 trillion global wipeout and how some fear the Great Unwind has just begun. It's today's big take, and joining us now is Bloomberg's Bailey Lipshultz, who's one of the authors on this story, of course, one of the most read. And this is the big worry, isn't it? That we saw this sell-off yesterday, we saw volatility blow out, and really there's more to come.
Well, that's the big uncertainty and the big unknown, Shonali, is that no one knows if this is the, as we write, if this is the end of a 3-week pull down that really accelerated over the last 3 days, or if it's a sign of things to come. And when you look at volatility spiking like it did, and you look at the kind of rotation away from stocks that we've been seeing, it's no longer selling big tech to buy utilities. Everything was down sharply yesterday. The big question is, how does the Japanese yen play into that? How does the kind of lacing of all of these markets, whether it's bonds, stocks, or even crypto, how does that play out?
And perhaps a market that was more levered than met the eye.
Yeah, I think it's important to kind of explain the carry trade, at least in basic terms, for viewers who aren't, immersed in, like Shonali obviously talks about it every day. But basically, you have a generation of traders who are borrowing yen, selling them for dollars, and then putting the dollars into more profitable trades here, right? They haven't really seen this kind of snapback very often in terms of the yen going from, 162 to 140 in 2 weeks.
No, precisely. And you see that July 3rd, we were at 161, almost 162 on the dollar yen. And now, as you mentioned, it is 144, going back towards that 140 level that we saw coming into the year. So as you mentioned, if you're borrowing yen because the interest is so low and the cost is so cheap to then deploy it, whether that's into bonds, whether that's into NVIDIA, the Mag 7 names, when those trades unwind, you're forced to sell to then bring that back to the
right. They owe the 161, exactly. And now their dollar only buys 140. Exactly. So they need to spend more to get that money back.
And this goes back to, and I've been covering markets for a number of years, and you have conversations, whether you're an industry specialist or a macro investor, you wind and unwind trades. So we're seeing that unwinding because people have piled into similar trades.
Now, that's a massive unwind with a carry trade alone. There's another wonky dynamic here, and that is all the people who are having to sell volatility into this market. And you saw that panic level of 65 yesterday. You're now back down to about 31. Still, 31 is relatively elevated to where we've been. Bailey, you cover the capital markets so closely. There was an IPO comeback. There was a bond market comeback in terms of issuance. A VIX at 30. Does that ruin all of that hope?
Well, the one thing when you look at, especially with new issuance, August is so quiet historically. So we happen to be in a month where people aren't actually going to raise capital.
Pain could have been worse.
Exactly. If this happened post Labor Day, when we're penciling in a lot of these bigger deals, the last real window when I talk to capital markets bankers, that's when the pain could be kind of more drawn out and more kind of dire for would-be issuers. Whereas, again, we're seeing the turnaround Tuesday not really play out. But the big question is what happens in the coming days and weeks, just given, for the most part, big tech earnings are behind us, and a lot of those seasonal factors are going to weigh. Typically, we see August and September being weak.